Hello and welcome to another episode of Stock Talk. Today we're bringing you in our series covering Coinbase, the stock ticker Coin. Let me tell you, this is an exciting time to be covering Coin because as the crypto market moves, so does Coin. And as Coin moves, so does the crypto market. Barron's has actually dubbed this the Coinbase effect. But there are still risks and we are still in uncharted territory. Coin's success depends much more than on its innovations alone, but on the market at large and on the broader adoption and institutionalization of cryptocurrency in general. Today, we're going to continue talking about the company and its stock, but we are also going to explore the economy, unanswered questions about the future of crypto, and recent headlines about Coinbase. For these reasons, I want today's episode to be especially interactive. I invite you to share your thoughts on today's episode in the comments below. So, do we still think Coin is a buy? Before we answer, click like and subscribe to my channel below to stay in the know. Coinbase is in fact the largest crypto exchange by volume, and despite being around since 2012, it only recently went public via DPO, which means direct public offering, less than about 2 months ago. And it already boasts more than $1 billion in revenue and serves over 100 countries with 56 million users. Over the past 6 years, Coinbase has hit many important milestones. In 2014, it partnered with companies like PayPal to enable payments in Bitcoin. In 2015, it received an investment from none other than New York Stock Exchange. In 2018, it even launched its own early-stage venture capital fund called Coinbase Ventures. And just last year, it introduced a Coinbase Visa debit card. Coinbase also offers both retail and institutional services. This means it not only serves people like you and me through Coinbase, Coinbase Pro, and Coinbase Wallet, it also offers Coinbase Prime and Coinbase Custody. Now, this part is important because it explicitly shows that the company is beginning to institutionalize itself by entering the space where investment brokerage firms offer third-party services, what we call the wholesale side, to existing and established retail investment firms. If this bet pays off, they will solidify their standing as a major player in financial services. So, now what about the stock itself? Is it still a buy? What do you think? Let me know in the comments down below, but also let me give you some food for thought first. Coin DPO'd at 381 before hitting a 52-week high of 429.54. It's currently at about 230 with a 1-year price target estimate of 395.64. So, you may be wondering what exactly happened. If the company is supposedly so good, why such a drastic plunge from its 52-week high? Well, remember Barron's Coinbase effect. As coin goes, so does crypto. But also, as crypto goes, so does coin. On April 25th, coin plunged 32% as cryptocurrencies in general lost $220 billion of value. Remember to hit that like button. Yes, the like button. Now, this actually exposes the inherent risk in crypto meme stock investor risk-taking. In this case, the risk was leverage. Cryptocurrency took its plunge because too many traders borrowed too much money to buy crypto, and when enough of a fluctuation in price happened, they were all forced to sell at essentially the same time to cover their losses, further depressing prices. What do you make of that? Can we trust crypto investors or traders to temper their risk appetite and temper the price volatility that comes from it? Let me know in the comments below. Investing philosophies and trading strategies aside, we actually see this as a great buying opportunity. It's almost as if we are at a sweet spot, not too close to the 52-week low of 208, but also nowhere near its 429 high. With the momentum behind the underlying company, this stock still has room to rebound. But let's take a pause and say that coin dips below 200. Let's say it reaches 170 to 180. It's not the end of the world. It's an even better buying opportunity. Go in heavier. I, myself, at that point, would buy options projecting even more substantial price rebounds going into 2023. What would you do? Let me know in the comments down below. So, what is underlying our bullishness? Why are we suggesting to go all in even if price dips further? Coinbase has strong financials. Return on assets currently stand at 16.16%, and return on equity, the return metric based on shareholders' investment, stands at an impressive 54.20%. Investors are getting over half of their investment back just through Coinbase's ability to generate income, a very healthy level of support and stability for an otherwise volatile crypto market. A profit margin also comes in at a robust 36.8%. In our first episode on Coin, we also covered Coinbase's EBITDA, or earnings before interest, taxes, depreciation, and amortization. Remember, it's a metric primarily used to help investors understand a company's ability to generate positive cash flow for its owners, as well as to judge a business's operating performance. Since our last episode, EBITDA more than doubled over the last, trailing 12 months from 527 million in 2020 to 1.74 billion as of right now. Coinbase has also experienced a very healthy influx of cash across the board, despite an increase in capital expenditures. Now find me a new company that can do that. Free cash flow, or cash flow that can be used to increase shareholder value, increased from 2.5 billion in 2020 to 4.9 billion now. Operating cash flow increased from 3 billion to 5.9 billion, and to make matters even better, Coinbase is sitting on a pile of cash, up to 8.3 billion from 4.9 in 2020. With this healthy level of cash and cash flow, Coinbase stands ready to either make further investments in its growth or weather potential future volatility in the crypto market. We think this is setting Coinbase up for strong upward price momentum over the long term. What do you think? In the last episode, we started exploring the issue of a relatively stale bond market and the prospect of increasing inflation. I'd like to take a poll here. How many of you are concerned about inflation? Are any of you concerned about deflation? There are good arguments on both sides. That being said, let's try to focus on what we know. Interest rates, despite the recent upticks in inflation, remain depressed by historical standards and are expected to remain so, with the market expecting less than 25 basis points Fed increases through September of 2024. If anything, the Fed is arguing the recent uptick is transitory and due to stimulus spending and the post-pandemic reopening of the economy, which has resulted in increased demand and downward pressure on the supply of labor and raw materials. However, if you find yourself skeptical or outrightly disagreeing with the Fed, you're not alone. Analysts at Bank of America and the market at large think the devil is in the details. CPI, the Consumer Price Index, is up 0.8% since March, when Coin DPO'd, and that marks its highest increase since 2009. Now, the historical truth is that the tipping point for ending an otherwise normal increase in stock prices is 4% inflation. At that point, investors get skittish about future Fed tightening. But do all investors know this? What about the meme stock noise traders? Only time will tell. As it stands, current PCE, personal consumption expenditures, as reflected in the current 2.4% 10-year Treasury break-even rate, are not too far out of line with the Fed's current 2% long-run inflation target. It's almost like we're in a ping-pong match of perspectives, is it not? Which side of the table are you on? Be sure to let us know in the comments and be sure to click like and subscribe. Now, regardless of where you may stand on inflation or concerns of an overheating economy, I have to introduce what we feel is a reasonable base case scenario. As we mentioned in the last episode, people tend to flock to cryptocurrencies as an alternative to an uncertain stock market. In other words, we're expecting that retail investors will come to see crypto as a source for diversification, just like sophisticated investors see private equity, venture capital, hedge funds, and real estate. Non-retiree investors, who are stuck in bonds, bullish in a healthy rise in inflation, will see crypto as an opportunity to search for yield, which will only serve to sustain a coin rally. And for investors that don't believe the Fed will be able to control inflation, and to a greater extent the depreciation of the US dollar, will bet on the fact that crypto will gain wider spread adoption as sort of a inflationary shelter, a potential sort of a hedge, non-correlated to the traditional fiat currency market. But that part of the scenario is already more speculative than not. What we are betting on is investors' and traders' impressions. And for what we've seen thus far, impressions go a long way in pricing in expectations early. Now, which camp do you fall into? Could market volatility lead more people into cryptocurrencies? What about merchants? What about the volatility of crypto itself? Let us know in the comments down below. We will explore these questions and hopefully more in future episodes covering Coinbase. But just to plant the seed, what do you think about the long-term viability and widespread adoption of crypto as major banks open up to it and central banks start developing their own coins? What are the regulatory or even hacking vulnerability concerns for platforms like Coinbase? How will we manage various competing coins? Will this be a rival underground economy, or will it be fully integrated into the traditional economy? These are the questions that will determine Coinbase's future. Coinbase right now is the largest player in the crypto exchange. It has among the safest features and even pioneers innovations in safety. We and even Goldman Sachs agree that investing in coin is a good way to get indirect exposure to cryptocurrency at a lower risk and lesser degree of volatility. User base, transactions, and money exchanged only continued to increase on the platform. This might be a long-term value play, but only time and a track record will tell. After all, Coinbase is positioning itself as an early entrant into the crypto market as crypto is getting more widespread adoption. JP Morgan gives Coin a $371 price target and Goldman Sachs a target of $306, citing an expectation on wider adoption of crypto and an increase in Coinbase's ancillary services to investors besides trading. We give it an even higher price target, at least over $400, and D.A. Davidson echoes Barron's sentiments that Coin and the crypto market are inextricably linked. Well, that's all for us today. We're going to continue to follow this for you and keep you updated on the latest news on Coin and the crypto market as it relates to Coin. Share your thoughts, leave a comment down below, click like and subscribe. Thanks for tuning in, and we'll see you next time.